we are in the first inning of this economic collapse that we're seeing happen. Today, the stock market, the S&P 500 dropped like 4.3%, and Bitcoin dropped about 8 to 9%. Now, there's a lot of issues with a lot of these different markets, and we're again just in the very, very beginning. Literally, there's so many people just so close to economic catastrophe right now to where they won't be able to move. They won't be able to put enough gas in their car to drive away. They can't fix like a small repair. It could be a serpentine belt, it could be an alternator, it could be a flat tire. It could really be anything. It could be that they have an injury or something. They can't pay for it because they can't meet their copay, or they can't pay for their health insurance, or this or that. So you start to run into a lot of issues, and what's going to happen over time with what we're seeing right now. So as you know, these companies see the writing on the wall, things don't look good. They've already rescinded a lot of offers. Uh, Students that are just graduating college and stuff like that, maybe they're not able to get the job that they thought they were going to get. And people that were trying to switch careers or switch to this or that, or were working remotely, they're being called back into the office. It's sort of this silent layoff. Now, what happens there? Let's say they were up in New York City and they got out of there. They went down to Florida. They went to Texas. They went to Arizona. People in California went to Arizona. Then they kind of are getting called back in the office, and they can't actually physically go back to the office because they moved. And then suddenly they have an issue. So they have to try to find other employment, but nobody else is hiring. And a lot of people are clinching up and lowering their standards as far as maybe how much they're willing to offer for various different jobs, whether it be tech jobs or software development, and it really could be anything. So what ends up happening then over time is a lot of these people getting displaced from their housing situation or not renewing leases. They end up moving in with other people, where that be friends and family. And that's why we end up with this huge oversupply of houses, because they're building way more than the demand suddenly is. And 6 months ago was different than it is now. And suddenly there's nobody to buy these new builds. There's nobody to move into that new apartment complex. And they're moving out of the ones that were already existed. Then what'll happen is you'll start to get these people that maybe they were on loan forbearances, and there's this huge flood of back rent and people that were back behind on their payments for their mortgage. And then suddenly that all comes to the forefront. People start to get foreclosed on, and then these properties start hitting the market. And we haven't even seen the short sales. We haven't seen a lot of the short sales come in where people are upside down. We're going to see that probably in the next 5 to 6 months. There'll be this huge wave of properties that need to be short sold, because even if they potentially have a buyer, they're upside down on the loan. They can't make up the difference. And then the bank is going to have to agree on a short sale. Otherwise, they'll have to foreclose, and then it'll have to go to auction. Now, you're going to have a lot of investors offloading their properties, and you're going to have these illegal kind of Airbnb situations where maybe it wasn't permitted in that municipality. Maybe you were supposed to do like month-long Airbnbs, but the people were doing kind of 1-week deals, and they were kind of skirting around kind of the rules and the laws of kind of that municipality. And maybe it was a property that they were previously renting. I've seen this before, where they were renting a property and they decided to buy another property, but they had started to do Airbnb on maybe some of the second, third, fourth bedroom. And then they start thinking, well, I'll go get this other property and I'll move in over there, and then I'll keep Airbnb in this thing out. Well, eventually that's not going to be profitable, and then they're not going to renew the lease, or it's actually going to destabilize their situation with their current living situation in the mortgage, in the house that they have a mortgage on, especially if their employment changes or different things change. So what ends up happening is people get trapped into a corner real quick, and then any kind of situation that happens, any kind of emergency situation, suddenly they don't have the money. And when everybody else needs money, like when you need money, everybody else needs money. That's kind of the common thing. When the tide goes out, things get tough, and everything got tough for everybody because everybody clinched up, and it just sends this domino effect through the entire economy. The economy is way worse than people are leading on or people think. This is going to be a complete replay of the 2008 crash and, you know, real estate collapse and stuff like that, and stock market crash. Complete repeat. Today is just the very, very beginning. We're just in the first inning, literally. We're just in the first inning. So what's going to be some of the first things? We've already seen the tide go out with crypto, and that was a little bit in accordance to the kind of 4-year cycles. The cycle maybe didn't get as high as some people anticipated and stuff like that, but it is your most liquid asset a lot of times. So people offload that, offload ATVs and boats, some of the toys, start offloading that. So those markets get disrupted. Then you've got the situation with the stock market that's more liquid than the real estate, and then real estate will be the slowest to completely burn off, just because it's an illiquid market and it takes time. So like if you think a year ago the inventory levels were maybe like 2 weeks or a month's worth of time, you put the house on the market, boom, it's getting offers over asking price right away. That whole situation has obviously changed, and then what ends up happening is, okay, some of these properties on the market, they keep like reducing the price, but the inventory still might be 5, 6, 7 months in some of these cities. And then there's all these new builds that have still not come to the market in places like Phoenix or Tucson, or it could be in Boise, Idaho, it could be in the Dallas-Fort Worth area, it could be in Austin, Texas. So a lot of these new builds and a lot of these apartment complexes are not actually out there, and then they're not able to fill them. They're not able to sell the properties. They're not able to fill the apartments, and then suddenly whoever the investors were, suddenly they're upside down on their investment. In the Phoenix metro, you got about 43% of those properties that are investor owned, whether that be second, third, fourth, fifth properties. These single family homes, they're going to start offloading those. They already have, and you see people adjusting kind of what they were trying to get for rent. They keep adjusting it down to get somebody in there, lock them into a year. So suddenly it's a race to the bottom, lowering the price, and it just ends up being a slugfest. Just go to the bottom, to get something in there. Otherwise, they're not going to be able to pay their mortgage maybe that they have on there, and then it's going to destabilize their living situation. So people just quickly, very, very quickly end up in a bad situation. Now, you're going to see a lot of those foreclosures and stuff like that, and you're going to see people clinch up, and they're going to move back in with friends and family, and they're going to consolidate the living situation. When you got a situation that birth rates are down 20% since 2007, if a situation like that coupled with, obviously everything's super expensive with all the inflation, gas prices are still fairly high, food prices are out of control, and then suddenly the living expenses were way, way high, and then it's going to take a while for that to kind of burn off. People are going to get in trouble, and they need to slash the prices. And then same thing, people clench up their spending. They're not spending as much. Suddenly they have to be like real frugal, like they realize, well, I'm out of money, so I have to kind of batten down the hatches. That being said, I just want to reiterate, we're in the first inning of this thing. This is just a start. And then even once we go down and you think you're at the bottom, and maybe there's another bottom, and there's another bottom, and then you're going to skip along the bottom for a really long time. The whole thing long tails out, whether that's cryptocurrencies, whether that's the stock and option markets, whether that's real estate. Some of these markets are kind of disrupted with supply chain issues with the car market, but you're even seeing that, especially on the lower end cars. You're already seeing kind of this loan collapse situation, and you're getting a lot of repos and stuff like that. So the auctions will be heating back up. But again, a lot of people are going to end up upside down on their cars, and they already have, and so they're getting them repoed. They just don't feel like it's worth paying for it. They can't afford it. And once a lot of these offers are rescinded, people are maybe getting laid off, various things, or they're not able to kind of go out there and get that second employment opportunity, or maybe their small business they were working on and they were building that, maybe that is collapsed, and suddenly their sales are way, way down. Things aren't looking good. So that being said, guys, I do this video as partially a warning, but if you haven't studied these previous collapses, it's literally a cookie cutter repeat of basically the 07, 08 collapse. It's literally just cookie cutter. Now, what are some of the ways that they could get out of it? Now, they could drop the lending standards. We saw Bank of America was going to do that with the lending standards, and they were going to try to spin it as this kind of helping minorities and stuff. And they were saying that, like, well, black and Hispanic people can get these loans regardless of their credit score without putting a down payment and no mortgage insurance. Now, again, that's kicking the can down the road. And then what's going to happen in the future? Well, they're probably going to get in there. Let's say if they do that, they're going to get in there, and then they're going to get into trouble just because the job market and stuff collapses, or various other things collapse. And, 5-6 months down the line, they're not able to make the payments, potentially. So that's one way that we can kick the can down the road a little bit further. Another way would be like if a lot of these banks started doing 40 and 50-year notes, because already 30-year note is pretty long in itself, but then they could lower the monthly payment by doing 40 or 50 years, and more people would be like, well, I can afford that. Okay, it's only going to be $1,500 a month, or it's only going to be this or that a month, and then they'll get them in on that. But until this thing just completely kind of washes out and we long tail out, we're not going to be out of it. And so any kind of actions to try to prolong this or kick the can down the road is just going to make it worse. And in a lot of ways, that's kind of what we're seeing actually with all the money that was pumped into the system through the pandemic. Now we're at the situation where we can't really kick the can down the road anymore. And now real estate, and this real estate bubble is actually higher than the previous bubble in 05, 06, 07. So we're not in a good situation, and that comes like in accordance with how much people are spending compared to their income. They're spending way more on their housing than their income in comparison to the last bubble. And then the expense of just living, the food expense, the gas expense and stuff like that is comparatively higher. Just everything is just inflated away. So we are in for the long haul, guys. So my advice is to definitely, hunker down and kind of realize what is happening. We are in the first inning. So you have to pace yourself, and you got to figure out other ways to bring in income. So what do you guys think? What is going on in your housing market? Are you seeing a lot of the prices slashed? Or are you seeing people getting laid off? What is kind of going out there? I like to put fillers out there and kind of like hear from you guys, just to see what's going on in other parts of the country and other parts of the world. Anyway, guys, follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, DTube, everywhere. See you guys.